Welcome back to BullionIQ, the channel where we cut through the noise and talk about crypto the way it really is. Not hype, not fear, just clear analysis so you can make better decisions. Today's topic is one that has been creating a lot of confusion, frustration, and honestly a lot of fear in the XRP community. In 2026, Ripple sold a record amount of XRP, and many people are calling this a massive problem for XRP's future price. Some are saying XRP can never truly move higher as long as Ripple keeps selling. Others are questioning how Ripple can claim to be bullish on XRP while also selling it at the same time. So in this video, I want to slow everything down, zoom out, and break this situation apart logically, calmly, and professionally, because this is one of those moments where surface-level headlines can completely distort the bigger picture. Before we go any further, I just want to say thank you to everyone who continues to support BullionIQ. If you find value in these deep dive discussions, liking the video and subscribing to the channel helps more than you might realize. It allows this content to reach more people who are also trying to understand the crypto market instead of reacting emotionally to every headline. And as always, if you're looking for places to buy XRP, you'll find links in the description, but let's stay focused on the analysis because this part really matters. Now let's address the core concern head on. The argument goes like this. Ripple sold a huge amount of XRP in 2025 and into 2026. Therefore, XRP is under constant sell pressure. Therefore, the price cannot go up. On the surface, that sounds logical. More supply hitting the market usually means lower prices. But the problem is that this argument stops at step one and never looks deeper. In financial markets, context is everything. And without context, even true facts can lead to very wrong conclusions. First, it's important to understand that there is no such thing as a perfect digital asset distribution model. Every blockchain has some form of sell pressure. In Bitcoin's case, miners receive newly minted BTC for securing the network, and they sell a portion of it to pay for electricity, hardware, and operations. That is ongoing, constant sell pressure. It doesn't stop. In fact, if miners didn't sell Bitcoin, the network would not function because they would not be able to operate profitably. So the idea that Bitcoin has no sell pressure is simply not true. When you actually compare the amount of Bitcoin that enters the open market through mining versus the amount of XRP Ripple sells into the market, the numbers are surprisingly similar. Ripple is not doing something abnormal or extreme compared to other major networks. The difference is psychological. People see Ripple as a single entity selling XRP, while Bitcoin's sell pressure is spread across thousands of miners. But from the market's perspective, sell pressure is sell pressure, regardless of where it comes from. Now here is where XRP becomes very interesting, and this is something that many people completely overlook. XRP is a fixed supply deflationary asset. No new XRP will ever be created. Ripple only has a limited amount that it can sell, and every time it sells, that future sell pressure permanently decreases. Bitcoin miners, on the other hand, will continue selling newly issued BTC for years to come. This means that over time, XRP's sell pressure naturally declines, while demand can increase. That imbalance is what drives long-term price appreciation. This leads to the next big question people ask. If Ripple truly believes XRP will be worth significantly more in the future, why sell it at all? Why not just hold everything and wait? The answer is simple but uncomfortable for some people to hear. Ripple is not building XRP for retail users alone. Ripple is not betting on you and me buying coffee with XRP to drive mass adoption. And honestly, I agree with them. Retail usage alone will never move trillions of dollars. The technology is too complex, and the scale required is far beyond what everyday users can provide. Ripple's strategy has always been institutional first. Banks, payment providers, custodians, and financial infrastructure companies are the real drivers of global capital flows. And this is where the XRP sales begin to make sense. Ripple has used its XRP war chest to acquire companies that are systemically important to the global financial system. We're talking about custody infrastructure, treasury connections, and payment rails that touch thousands of banks. These are not flashy acquisitions for headlines. These are foundational building blocks. When Ripple acquired companies like Metaco, gained access to thousands of banks through treasury connections, and strengthened its position in institutional payments, that value did not disappear. It was converted. XRP was sold on one side, but real-world utility, adoption pathways, and financial plumbing were created on the other side. The question investors should be asking is not, is Ripple selling XRP, but what is Ripple building with the proceeds? From my perspective, this is a classic short-term pain for long-term gain situation. Without that XRP war chest, Ripple likely would not have survived regulatory pressure, would not have expanded during bear markets, and would not have positioned XRP as a serious institutional asset. Many crypto companies collapsed, cut staff, or disappeared entirely. Ripple did the opposite. They expanded, hired, and acquired. It's important to take a step back and look at how the crypto market actually behaves over long periods of time, not just during emotional moments. One of the biggest mistakes investors make is focusing too much on short-term supply events while completely ignoring what is being built underneath the surface. Markets don't reward emotion, they reward positioning, patience, and fundamentals. And this is where the XRP sell pressure narrative starts to fall apart when you really analyze it properly. Let's talk about something very simple but very powerful. Sell pressure only matters if there is no offsetting demand or no future catalyst that can absorb that supply. If Ripple was selling XRP and doing absolutely nothing meaningful with the proceeds, then yes, this would be a serious problem. But that is not what's happening here. Ripple is using XRP as strategic capital. They are converting a digital asset into real-world financial infrastructure. That is not dilution without purpose. That is reinvestment. Now compare this to what many other crypto projects have done over the years. Countless projects raised money by selling their native tokens to venture capital firms at massive discounts. Those VCs then waited for liquidity events and dumped those tokens on retail investors. In those cases, the selling pressure didn't build infrastructure, didn't create adoption, and didn't strengthen the ecosystem. It simply transferred value from retail to early insiders. Ripple's model is fundamentally different. The selling is transparent, structured, and tied directly to business expansion. Another thing people forget is that Ripple is heavily aligned with XRP's long-term success. Ripple doesn't just hold XRP for speculation. XRP is deeply integrated into their business model, products, and future strategy. If XRP fails, Ripple's long-term vision fails with it. That alignment matters. When Ripple sells XRP, they are not abandoning the asset. They are redeploying capital to strengthen the very system XRP depends on. This is also where timing becomes critical. Ripple didn't sell record amounts of XRP during a euphoric bull market peak to cash out and disappear. Much of this selling occurred during uncertain, difficult periods when capital was expensive and market confidence was low. That tells you something about intent. They were positioning during weakness, not exiting during strength. Historically, the companies that build aggressively during downturns are the ones that dominate when conditions improve. Now let's talk about the emotional side of this because it's real and it affects a lot of holders. When price goes sideways or down for long periods, people start looking for a villain, something to blame. Ripple selling XRP becomes an easy target because it's visible and easy to understand. But markets are far more complex than that. XRP has gone through regulatory pressure, exchange delistings, macroeconomic tightening, rising interest rates, and a global risk-off environment. To isolate price action and blame it entirely on Ripple selling is simply inaccurate. If we zoom out and look at XRP's performance since 2020, the data tells a very different story than the headlines. Despite one of the most aggressive regulatory cases in crypto history, XRP has still managed to outperform many major digital assets over that same time frame. Projects with no lawsuits, no regulatory pressure, and no centralized selling have collapsed, lost relevance, or underperformed dramatically. That alone should force people to reconsider the idea that Ripple selling automatically kills price appreciation. There is also a structural shift happening in crypto that favors assets like XRP. The market is slowly moving away from speculative narratives and toward utility, compliance, and integration with traditional finance. Institutions don't care about memes or hype cycles. They care about liquidity, reliability, regulatory clarity, and infrastructure. XRP checks more of those boxes than most assets in this space. That transition takes time, and during that time, price can lag fundamentals. But historically, price eventually catches up. Another key point that often gets ignored is that XRP liquidity is not a weakness, it's a strength. XRP was designed to move large amounts of value efficiently. For that to work, the asset must be liquid, widely distributed, and actively traded. Ripple selling XRP into the market over time has helped create that liquidity. An asset locked away forever with no distribution does not become a global bridge currency. Distribution is a necessary step, even if it creates discomfort along the way. From a professional market perspective, what Ripple has done looks less like reckless dumping and more like controlled capital management. They sell into strength, they adjust based on market conditions, and they maintain long-term reserves. This is how mature companies operate. No successful company hoards all of its assets forever. They deploy capital to grow, they invest, they expand, and yes, they sometimes take short-term criticism for long-term positioning. What we are really seeing right now is a disconnect between market psychology and market reality. Psychologically, people want instant results. They want price to reflect future potential immediately. But markets don't work that way. Reality moves slower, builds quietly, and only becomes obvious in hindsight. Most people only realize what mattered after the move has already happened. As we move forward, the key question isn't whether Ripple selling XRP creates temporary pressure. It does. The real question is whether the value being created on the other side of those sales outweighs that pressure over time. In my analysis, the answer is clearly yes. The groundwork being laid today is not designed for next week or next month. It's designed for years ahead, and that is market psychology. This is the part most people underestimate, but it's usually the difference between those who survive long cycles and those who give up right before things change. Markets do not move in straight lines, and they rarely reward the majority opinion. In fact, when a narrative becomes extremely popular, it is often already priced in. The fear around Ripple selling XRP is a perfect example of this. When everyone starts saying the same thing, that XRP will never go up because Ripple keeps selling, that tells me the market is likely already positioned for that outcome. And when markets are positioned one way, it does not take much for them to move in the opposite direction. This is why sentiment is so important. The worst price action usually happens when sentiment is at its lowest, not when fundamentals are broken, but when confidence is exhausted. What we are seeing with XRP right now fits a very familiar pattern. Long periods of underperformance, endless negative headlines, frustration among long-term holders, and a constant feeling that this thing just never moves. That emotional state is not random. It is usually what forms near the later stages of a downtrend. Most people don't quit at the top, they quit at the bottom, emotionally speaking, because that's when hope feels the weakest. Now, when we look at XRP specifically, there are multiple capitulation signals flashing at the same time. Long-term holders are tired, new investors are uninterested, social sentiment is muted or negative, and yet underneath all of this, development, partnerships, and institutional conversations are continuing. That divergence between price sentiment and fundamental progress is exactly what creates opportunity, not risk. Let's also talk about the idea of a perfect bottom, because this is something that traps a lot of people. Many are waiting for a clean V-shaped reversal, where price crashes hard and then instantly recovers. But markets don't always give that kind of clarity. Often bottoms are messy, slow, and boring. They form through long periods of sideways movement, failed rallies, and repeated disappointment. That process is designed to shake people out, not reward patience immediately. XRP has been stuck in a long downtrend since mid-2025, and every bounce has been met with skepticism. That skepticism is important. Strong trends do not end when everyone is confident. They end when confidence is gone. From my experience, when people start saying this will never reverse, that's usually when it's getting close. Another important factor to consider is relative performance. While people focus on XRP's struggles, many other crypto assets have been quietly losing value, liquidity, or relevance. Some projects that once outperformed XRP are now dealing with declining usage, governance issues, or fading narratives. Price alone does not tell the full story. Sustainability matters, especially as the market matures. We are also entering a phase where macro conditions are slowly shifting. Interest rate expectations, liquidity cycles, and capital rotation all play a role. When risk appetite returns, capital doesn't flow evenly into every asset. It flows into assets with deep liquidity, regulatory clarity, and real-world relevance. XRP sits very high on that list, even if the market hasn't acknowledged it yet. Another thing that deserves attention is Bitcoin dominance. Historically, when Bitcoin dominance peaks and starts to roll over, capital begins rotating into large-cap altcoins. This process is slow at first and often goes unnoticed. People expect explosive moves immediately, but rotation happens quietly before it becomes obvious. XRP does not need to outperform overnight. It needs consistent relative strength over time, and that often begins when no one is paying attention. What makes this moment uncomfortable is exactly what makes it interesting. The market is not giving easy signals. It's not screaming buy. It's whispering doubt, and that is usually where the best long-term positioning is formed. This does not mean price cannot go lower or that volatility is gone. It means the risk-to-reward dynamic is shifting, even if it doesn't feel like it emotionally. It's also important to understand that institutions do not chase green candles the way retail does. They build positions during periods of uncertainty, when narratives are negative and liquidity is available. They care far more about structure, infrastructure, and long-term relevance than short-term price action. The very things that frustrate retail investors are often the conditions institutions prefer. So when you combine negative sentiment, declining confidence, long-term accumulation zones, and strengthening fundamentals, you start to see a picture forming that looks very different from the headlines. This does not guarantee immediate upside, but it does suggest that the worst emotional phase may already be behind us. Connect everything we've talked about so far, fundamentals, Ripple's strategic selling, and market psychology, to what's actually happening with XRP price right now. Understanding the chart in this context is crucial because it tells the story of how these elements interact in the real world. Price action is never random. It is the visible reflection of everything happening behind the scenes: adoption, infrastructure, sentiment, and liquidity. When you can read it correctly, you gain a huge edge over those who react emotionally to headlines alone. Since mid-2025, XRP has been in a long downtrend, struggling to break key resistance levels and feeling like it can never escape. Many holders felt trapped, watching other assets move while XRP seemed stuck. This is exactly the kind of market environment that generates headlines about sell pressure and ripple dumping. But price alone doesn't tell the full story. What it does tell is that XRP has been consolidating, building support, and quietly preparing for its next move. Right now, we're seeing XRP forming what I would call a structured bounce. It's touching resistance levels around the $1.80 to $2 range, which is significant because breaking this level could signal the end of the prolonged downtrend. Importantly, support has held firm despite repeated attempts to push the price lower, showing that market participants are not willing to let it collapse entirely. That's the first hint that a reversal could be closer than many realize. From a technical perspective, these bounces are consistent with what I call late cycle accumulation. This is when long-term holders and institutions start taking meaningful positions after a prolonged period of negative sentiment. The asset doesn't immediately explode upward. Instead, it moves slowly, building confidence gradually. Those who understand the fundamentals, like Ripple's strategic moves and XRP's deflationary design, start to see value where others only see weakness. Another critical factor is the broader crypto market environment. Bitcoin dominance, which measures Bitcoin's share of total crypto market cap, has been trending downward. Historically, a falling Bitcoin dominance indicates that capital is slowly rotating into altcoins. This is not a sudden move. It's a slow grind that often goes unnoticed until the rotation is already well underway. For XRP, this means there is a growing opportunity as investors look for assets with deep liquidity, regulatory clarity, and strong institutional backing, exactly what XRP provides. Additionally, the market has been misaligned with XRP's fundamentals for a long time. While headlines focused on Ripple selling, the company was building connections with over 13,000 banks, expanding custody solutions, and strengthening payment rails. This structural development does not always immediately reflect in price, but history shows that assets with strong fundamentals eventually revert to their true value. Market sentiment often lags fundamental progress, creating opportunities for those who can see the bigger picture.
It's also important to understand why this period feels so difficult for holders. Emotional fatigue is natural when price lags, but this is often when assets are closest to reversing. Capitulation metrics, indicators of maximum stress in a market, show that XRP is near historical lows in terms of holder confidence. While it's painful, this is usually a signal that the bottoming process is occurring. In other words, the market may be at the point where the hardest part is almost over, and the easier part, the recovery, is beginning.
We also need to consider the macroeconomic perspective. Interest rate expectations, global liquidity, and risk sentiment influence all digital assets, including XRP. During periods of macro uncertainty, selling pressure tends to dominate as investors rotate out of riskier assets. But as conditions stabilize, assets like XRP with strong institutional adoption, real-world utility, and liquidity tend to rebound first. This means that today's price action could be setting the stage for a much stronger move when market conditions align. Finally, it's worth emphasizing that short-term fluctuations do not change the long-term story. Ripple's selling strategy, market sentiment, and institutional adoption are all variables that unfold over months and years, not days. The combination of declining sell pressure over time, increasing institutional integration, and strong fundamental support creates a scenario where XRP could break out of its long downtrend with meaningful momentum. Those who panic over short-term price dips are missing the forest for the trees. And current price behavior, let's dig into what this all means from a risk and reward perspective for XRP holders and potential investors. This is where theory meets action, and it's what separates thoughtful participants from those who make decisions based on fear or hype. The key here is understanding that short-term sell pressure is just one part of a much bigger picture, and when you evaluate it correctly, the potential upside is clear. First, consider the fact that Ripple's sales are strategically controlled. They are not random or reckless. Ripple sells XRP to fund acquisitions, partnerships, and infrastructure that directly strengthen the XRP ecosystem. These sales are predictable and purpose-driven, unlike some other projects that dump tokens to VCs who may immediately sell them to retail buyers. Understanding this distinction is critical because controlled sales reduce uncertainty over time. The market can absorb this supply more efficiently because it's not chaotic or speculative. Next, look at the long-term supply dynamics. XRP is a deflationary asset. Ripple has a finite amount, and every sale permanently reduces future potential supply. Unlike Bitcoin, where miners continue to introduce new supply for decades, XRP's sell pressure is finite and declining. Over time, this natural reduction in sell pressure creates an environment where demand can outpace supply more dramatically, which is a classic recipe for long-term appreciation. Now let's consider demand catalysts. Ripple is building relationships with tens of thousands of banks and major financial institutions through acquisitions and integrations. These connections are not for short-term hype. They are foundational infrastructure that can eventually channel trillions of dollars through the XRP ledger. The potential for institutional adoption dwarfs what retail activity could achieve alone. If you believe in the increasing role of digital assets in global finance, XRP is uniquely positioned as a bridge currency, and that makes this long-term upside highly compelling. Another critical factor is market sentiment versus fundamentals. The worst time to judge an asset is when sentiment is extremely negative. Right now, XRP is at a point where frustration, skepticism, and headline-driven fear are very high. Long-term holders are fatigued, retail participants are disengaged, and many casual investors have already exited. Paradoxically, this is exactly the environment that often precedes significant upward moves. When the majority of the market has written off an asset, there's very little pressure to sell, and any positive developments can trigger outsized moves. It's also important to recognize that XRP's infrastructure growth is cumulative. Every partnership, acquisition, and integration builds more utility into the system. These developments are structural, not temporary. The selling of XRP is a short-term mechanism to fund these initiatives. Over time, as the infrastructure strengthens and usage increases, the market begins to price in these fundamentals. What seems like a negative today, Ripple selling, becomes irrelevant tomorrow when the upside from adoption outweighs short-term supply. From a technical perspective, XRP has been consolidating near key support zones. These are not random price levels. They reflect where buyers find value and are willing to step in. Support around the $1.80 to $2 range has held firm multiple times, which signals stability. Resistance levels are being tested repeatedly, and each attempt increases the likelihood of a breakout. Combine this with declining Bitcoin dominance and slowly returning risk appetite in broader markets, and the conditions are aligning for a potential trend reversal. We also have to consider institutional positioning. Unlike retail investors, institutions are patient. They accumulate during periods of uncertainty and low sentiment because that's when prices are attractive. Ripple's integration into banking infrastructure gives institutions confidence that XRP is not just another speculative asset. As institutional adoption grows, they may provide significant, stable demand, which absorbs any short-term selling pressure and reinforces long-term price support. Lastly, let's address the emotional component for investors. Holding through negative headlines is difficult. It's uncomfortable to see constant news about XRP being sold or price stagnating. But those who can detach from fear and focus on the bigger picture, the infrastructure being built, the declining supply pressure, and the growing institutional adoption, are positioned to benefit disproportionately. Emotional patience combined with an understanding of strategy turns what looks like risk into a potential high-reward opportunity. In summary, when evaluating XRP, you need to consider the full equation: declining sell pressure, controlled distribution, institutional adoption, infrastructure growth, macro trends, market psychology, and technical support. The risk exists, of course. Nothing is guaranteed, but the potential reward for investors who understand this ecosystem and its strategic long-term moves is significant. This is not about short-term price swings. It's about positioning for what could be one of the most structurally sound digital assets as the crypto and global financial landscape evolves. Let's bring everything together so you can see the full picture of XRP's current state, Ripple's strategy, and what it all means for long-term holders and potential investors. If you've stayed with me through the previous sections, you already understand the fundamentals, the psychology, the market behavior, and the risk-reward framework. Now we are going to connect all those dots into a clear, actionable understanding. First, let's talk about the strategic vision Ripple is executing. Every sale of XRP is not random. It's a calculated move to fund acquisitions, expand institutional reach, and strengthen infrastructure. Ripple is building real-world use cases for XRP, and that is far more valuable than short-term price movements. Many retail investors see the headlines and panic, but this is exactly where patient, informed investors gain an edge. The narrative of Ripple is dumping XRP, price will never rise, is overly simplistic, and completely ignores the long-term strategy at play. Second, the deflationary nature of XRP cannot be overstated. There is a fixed supply, meaning every sale that occurs today reduces potential sell pressure in the future. Unlike Bitcoin miners who continue selling freshly mined coins indefinitely, XRP's supply is finite. Over time, this scarcity becomes a structural advantage. When combined with increasing demand from banks, custodians, and payment networks, it sets the stage for a significant long-term appreciation. Put simply, the more XRP gets distributed into the hands of those who will actually use it in institutional processes, the more value it can capture. Third, market sentiment is heavily skewed negative right now, which paradoxically is a potential bullish signal. The frustration, skepticism, and fear we see among retail investors usually occur near the end of a long downtrend. This is where patient holders are rewarded. History shows that assets with strong fundamentals often reverse when public sentiment is at its lowest, because that's when the market is most willing to absorb any short-term supply and start reflecting the real underlying value. Fourth, technical factors are supporting this narrative. XRP has found support in the $1.80 to $2 range, and resistance levels are being tested repeatedly. The consolidation and gradual upward bounces indicate that the downtrend is weakening. Combine that with declining Bitcoin dominance and slowly improving macro conditions, and you start to see the conditions forming for a potential trend reversal. This isn't about predicting an immediate spike. It's about recognizing a market that is positioning itself for a longer-term recovery. Fifth, the institutional adoption angle is critical. Ripple's acquisitions, Medico, G, Treasury, Rail, and others, are not just corporate growth moves. They are building a financial ecosystem that integrates XRP directly into traditional banking operations. This is a massive competitive advantage. While retail investors focus on short-term fluctuations, institutions care about utility, compliance, and scalability. Their slow, steady accumulation during periods of uncertainty lays the foundation for significant future demand. Sixth, let's address the risk-reward perspective one last time. Short-term sell pressure exists, but it is finite and declining. The upside from Ripple's institutional integrations and infrastructure growth far outweighs the temporary price pressure. Investors who understand this dynamic are not reacting emotionally. They are analyzing the situation strategically. XRP's current environment is one of the few times in crypto where patience and insight can create a disproportionate reward compared to the perceived risk. Finally, let's consider the bigger picture for XRP and crypto adoption. We are in a phase where the market is shifting from hype-driven narratives to utility-driven valuation. Digital assets that provide real-world solutions, regulatory clarity, and strong institutional adoption will outperform speculative projects in the long run. XRP is positioned perfectly for this environment. The strategic selling, declining supply, institutional adoption, and strengthening infrastructure all point toward a higher probability of long-term success. In conclusion, the headlines about Ripple selling XRP are easy to misunderstand and even easier to panic over. But when you analyze the fundamentals, the market structure, the psychology, and the technicals together, a very different story emerges. XRP is not just surviving, it is building a foundation for significant growth. The short-term challenges are real, but they are dwarfed by the long-term opportunity. For anyone willing to look past immediate price action and understand the broader strategy, XRP today represents one of the most compelling long-term setups in crypto.